Right, we did.
So this is our business analytics capstone project. It was created by Vedant, myself, Jenna, and Saul. We have a table of contents. So we have slide 3 is a history of 3M stock. Slide 4 is history of Sharpe ratio. Slide 5 is an introduction to our testing that we did. Slide 6 through 8 is the process of the code. Slide 9 is descriptions of the variables and the Sharpe ratio calculation. Slides 10 through 13 are the results of each strategy that was tested. Slide 14 is some takeaways, and slide 15 is the conclusion. So 3M is a company that was formerly known as the Minnesota Mining and Manufacturing Company. They're an American company and they offer solutions in safety, healthcare, and consumer products. They were originally founded in 1902 by 5 businessmen who started out as a mining venture. They're headquartered in Maplewood, Minnesota, and have corporate operations in 70 countries and sales in 200. As of today, they produce over 60,000 different products, and historically, they have many notable accomplishments, including producing the first ever asthma inhaler. They also worked on some of the first digital audio recordings, and they have over 100,000 patents. Some of their brands are Post-it, Scotch, Command, like Command strips, and Ace, like Ace bandages. They began paying dividends in 1916, and as of 2019, they have revenue of 32.136 billion, operating income of 6.174 billion, net income of 4.57 billion, total assets of 44.659 billion, and total equity of 10.126 billion. And for this project, we sourced our 3M stock data from Yahoo Finance, and the data date ranges 2016 to 2021. So one of the strategies we were exploring through the last few project submissions, as well as this one, is the strategy of buying on increasing Sharpe ratio and selling on decreasing Sharpe ratio. So using the most recent stock return records, we calculated the Sharpe ratio, and if it was larger than it was calculated in the previous date, then it was assigned buy, and the main use of the Sharpe ratio is to compare the risk and return of a particular investment, so it determines how much the return will increase as the risk also increases, so that investors can understand how to make the best investments on particular stocks.
So basically what we did over here, we used the decision tree model, and our decision variables were the buy, sell, or the whole signal that we actually recorded from getting the returns. We can explain that, I can explain that in the next slides. Our explanatory variables were the lowest price in past 5 days, the highest price in the past 5 days, the lowest return in the past 5 days, and the highest return in the past 5 days, along with the standard deviation as well as the slope. So in performing this random forest model, we used the data from 2016 to predict the model for 2017 and so on. So we had the data for 2017 and then predicted 2018 for the next 5 years. So as we go deeper into the code, we see that firstly, we just got the data and then imported it into our studio. We also changed the date to correct the format. And then we got the daily return from close to close price for the Dow Jones as well as our stock 3M. We started with our first step, that was the creating signals and the predictors. These signals actually helped us. We've used the past 5 days signals to calculate the next day's signal, would it be buy, sell, or hold. So what we did was we actually created a predictor using, again, the lowest price, highest price, lowest return, highest return, standard deviation, as well as a slope of the past 5 days data of the particular stock. And then we deleted the first 5 and the last 5 records in order to clean the data set and move on with it, since we use that as a training data. The step 2 actually was building the model. We could have used logistic regression over here, but we decided to go with the decision tree model, and we actually created a model list with all the signals as well as the predictors. So we actually received all the signals with buy, sell, and hold, and then we decided to use that in step 3 for predicting what would happen in next year. So based on our previous year data set, that was the 2016 data, we actually eliminated that data set and then created a new model where we actually created signals where it says buy, sell, or hold. We created a trading sample for this data from a subset of this model sample. In step 4, we actually implemented our trading strategy. So then we defined the system to actually basically operate on the signals that it had received. So if our previous holding was 0 and then it received a buy signal, our holding would turn to 1. And then we also calculated the return based on what we were selling and what we were buying. So we were defining our holding based on the previous holding and the trading signal. We also calculated the investment rate. So lastly, we updated the data in the trading sample data set. And step 5 was evaluating the performance. So we got the market data using the Dow Jones data set for the same date range. And then we merged this data with our trading detailed data set. We finally evaluated using the Sharpe ratio strategy, which we used in mini project 1 and 2. And we also used the Jensen alpha, as well as we went with something called no strategy to just evaluate the performance. And Saul will be discussing it further.
So I'll be analyzing the results of our code in depth. Our main focus in this project and the last two projects has always been Sharpe ratio, because the Sharpe ratio, as mentioned before, is actually is a real value that investors use to judge portfolios in the real world. So the Sharpe ratio, the formula for the Sharpe ratio is the square root of 252. Well, for distances, it is the square root of 252, with 252 being the available number of trading days in a year. So we multiply the square root of 252 times the average of daily return, and then divide that by the standard deviation of daily return. And the three elements that we focused on were the Sharpe ratio of our investment or the trading strategy being implemented, the Sharpe ratio of the 3M stock, and for that Sharpe ratio, we are assuming we are holding the stock regardless of our of the trading signal or our trading strategy being implemented. And finally, the Sharpe ratio of the market, so the Sharpe ratio of Dow Jones. So this table is a Sharpe ratio year by year. So 2017, the first column is blank because we're using not 2017 but the following year. As you can see in 2021, it is also blank because it is still a little too soon to see if our trading strategy will work. In 2018, you notice that there are all of 2018 is negative, which isn't which means that all three Sharpe ratios are the trading strategy, the 3M stock, and the market Dow Jones were underperforming that whole year. In 2019, the Sharpe ratio for the market was 1.68, so it was the highest. It outperformed both our trading strategy and the 3M stock. And in 2020, our trading strategy outperformed both the 3M stock and the Dow Jones market. In other words, the best decision that we could have made if we were investing was to follow our signals based on the trading strategy that we were implementing, because as the table shows, the Sharpe ratio of our trading strategy was 0.934, which is a really good sign because it's positive and it's very close to 1. And this quick short table is the Sharpe ratio over the entire period. So from 2016 to 2017, to 2021, we get the Sharpe ratios for all three elements. We have trading strategy, the 3M stock, and the Dow Jones index. And throughout the period, the market outperformed both our trading strategy and the 3M stock. So overall, the best thing that an investor could do is hold the Dow Jones index. And we then took a look into the Jensen alpha. So these are results of regressions. Again, 2017 is 0.00, 2021 is 0.00. These are actually regression coefficients from the decision tree. So In 2018, it's positive. In 2019, it's negative, which isn't a good sign. In 2020, it's also still positive. And overall, over the entire period from 2016 to 2021, the index is positive, but it's very low, which it's a bit of it's not entirely great, but it's not entirely bad either. And here is the Jensen the Jensen alphas without our trading strategy being implemented. So this time in 2017, you get a positive 0.08834007. And then 2018, 2019, and 2020, we get negative Jensen alphas. 2021, we get a positive Jensen alpha. And then over the entire time period, it is a negative Jensen alpha, which isn't a good sign. A negative Jensen alpha usually isn't a good sign. And here are some takeaways from the our results. Vedant, go ahead.
So we think Sharpe ratio was the most effective trading strategy out of all, since we used that on our first and second mini project, and we actually did a research based on this. As we've seen the data before, the Jensen Alpha with strategy as well as no strategy, it did not give us a good result. And as the Sharpe ratio, we'd seen it was 0.9 in 2021, as well as it showed a positive result over the years. And then we think that would have been more accurate since we have seen the stock data right now, and it has been moving towards a positive trend, and the Sharpe ratio was much more accurate than the other two strategies.
So conclusion, was our strategy effective? So after reviewing how implementation of our strategy affected performance year by year, in terms of Sharpe ratio, our strategy is actually showing signs of improvement, positive trajectory. So if you go back to the first table in our presentation, you'll notice that the Sharpe ratio values go from negative to positive starting from 2018. 2018, 2019, though we got negative Sharpe ratios, but in 2020, that's when things started to go up in a positive direction. In terms of Jensen Alpha, our trading strategy performs better than having no strategy. But a thing of note to keep in mind is that although the Jensen Alpha the Jensen Alphas that we receive are positive, the value is still low. And perhaps a different stock or combination of stocks, i.e. a portfolio, will give us higher positive values in a second attempt at implementing our strategy.
Here are some of the references that we used in researching the history of the 3M stock and also learning a little bit about the Sharpe ratio. We read up on these sources before we started the project. And that's it. And that's a completed Capstone project.
Yep.
Thank you.